All right, everybody. Thanks for joining this morning. Just want to go through overcoming objections with you guys. I know what the challenges are out there right now in the market. I know it's been kind of tough conversations with people because they're sitting, and waiting. They're like, I'm going to wait for this. I'm going to wait for that. I want to address those objections that you guys are hearing. I created a slide deck for this meeting, and then we can go from there as far as what questions you have on each slide if you have questions about that. But basically, just want everyone to be, hey, Nick, just want to make sure everybody is up to date on the information, the data to give to people. I'll be sharing the slide deck with everybody so you can pull up these charts or graphs if you need to show them. But really, it comes down to what you guys are doing right now to generate buyer interest in this market. So when the market changes and the market pivots, you need to as well. We can't expect to get business the same way we did last year because the market's different than it was last year. So let's get started. Let me see if I can share my screen and get our slides up. The title of our class today is Overcoming Buyer Objections and How Overcoming Personal Constraints is the Key to Success. So just a little snippet from some stuff I was reading recently that, resonated with me, because really where I saw a change in success in my life was when I took responsibility for what I was doing, noticed what my personal constraints were, and then destroyed them basically. No matter how formidable our talents, we are held back by behaviors that set the limits of our performance or define the reasons for our failure. In other words, our personal constraints determine our ultimate level of success. Change is not possible. It is an absolute necessity to survive. So let that resonate with you guys. I think that's a big statement there. So let's jump right in. Current relevant objections. So this is the stuff that people are hearing. Oh, the market is going to crash. Interest rates are too high. I'm going to wait. My brother says prices are going to drop. My cousin says buying now is for suckers. My blind and one-eye sister's best friend who's never owned a home is living paycheck to paycheck says renting is a better idea. Rent is cheaper than a mortgage payment right now. Keywords, right now. And any other things that you guys are hearing. What are some of the common things you guys are hearing right now? Anybody?
Yeah, I mean, you pretty much got everything that I was thinking about. The biggest thing for me is interest rates are too high. People want to wait. They're expecting the market to crash.
I was going to say the same thing. Prices
I've
are
run into some issues, at least here in California, where it's more of a down payment issue or closing costs, just because prices have elevated so much that 10% doesn't go very far.
So we'll touch a little bit on that. However, I also will be doing a class. Shelby will be doing a class. Joel will be doing a class. We've all got the same class coming up at different times. I highly recommend realtors that are on the call, you guys attend the class, whether via Zoom or in person, but they are going to be in-person classes for realtors within and outside of our company as well. But it's going to be talking about all the different programs out there. Knowledge is power, and you're not going to have power in this market if you don't have the knowledge to share with people and understand what is possible. There's a lot of people that have been disadvantaged by this market in the last few years and been sitting on the sidelines, unable to buy, not being taken seriously, being completely disqualified by more qualified buyers out there, more competition, less listings, all that stuff. So everyone who's been waiting to buy, this is their opportunity. And if we don't educate them on how this process works and what detriment they're going to have to their own buying journey next year when rates go down, they're going to be in the same boat again and wondering, shit, maybe I should have bought last year. So that's where we come into play, where our education comes into play. And always keep in mind, you want to do what's best for your client. If the client has more advantages now as opposed to next year, and the one disadvantage is a higher rate and a higher payment that's temporary, keep that in mind. So always do what's best for your client, not what's best for yourself. And it's your job. They come to you to be the professional. So it's your job to educate them. Let's jump into the first thing here I want to share with you guys. I want to go through some slides about the market, some data, not just hearsay, not just what the news is saying, because we all know they're fear mongers, not just what cousins and brothers and sisters are saying, but what is the market saying? I made a quick video online. Some of you might have seen it on Instagram. I did a reel, average days on market, cumulative. So this is, closed listings. Want to talk about average days on market because a lot of people right now are being scared. Oh, it's homes aren't selling, and a lot of sellers, if any of you have listings, sellers are like, drop the price, I don't know what to do, blah blah blah. And you guys should also pump the brakes on telling people to drop the price a week after they've been listed. Average over the last 10 years, average days on market is 81 or 82. We did the math when I made the video. That's how many days. And currently we're at 56 right here. That's current where we're at right now. So a couple things I want to point out for you here. The last time rates were this high. When's the last time rates were 7%? In 2003. So in 2003, average days on market was 82. We still have a whole month. I mean, we're at 56 days right now. We got to add like almost 30 days to the average days on market just to meet that level. Everyone's saying, oh, but the market's going to crash because everything's sitting on the market now. Well, is it? Let's talk about it. So right here is when the market crashed. When the market crashed, yeah, did average days on market go up? Sure, but here is where we're at right now. This is equivalent to our current average days on market. This is when the market crashed in 2008. So 150 days on the market. We're not even close. We would have to triple the amount of time that homes are sitting on the market for us to be in a situation where we were last time the market, quote unquote, crashed. There was a ton of inventory. And I can show you guys graphs on inventory. We've got a lot of data for that too. Right now, inventory isn't as high as it would be to warrant that a crash is coming. Now, let's talk about in 2010, 2011, that was an increasing market. So this here, right about here, is when the market started to turn. So 2008, 2009, a little bit into 2010, we had the foreclosures, we had the market, the prices were down, all of that. But this is when the market started going up in price. This is when things started getting better. So what was that? That was 120 days on market. That was more than double the amount of days on market that we have currently. So if that's the amount of time it took to sell a home when the market was getting better, then why would this be a concern? People seem to forget what the past says. And we just kind of want to take a look at these years here, because anybody that's on this call, most of us have been in this business, started, maybe in this area or sooner to here. So if you look at it, would you say that 2012 right here had more days on market than currently? Was that a bad year? No. Was 2013 a bad year? No. 14, 15, 16, 17, 18, 19, 20.
Jerry?
Every single one of those years, except for last year, the average days on market was higher than right now. So what's up, Devin?
I have a question. Do you happen to know what the interest rates were in 2010, 2011?
Interest rates were 3% at this time.
Okay.
Yeah, this until last year, until like 2020, this was the lowest rate we had seen since the crash. So this was the lowest rate ever. And then this was the lowest rate ever.
Yes. Okay. I just wanted to compare that. Thanks.
Yep. And then actually right here, what happened here? In 2014, 2015, rates went up. This is when rates were up to like 4.75. My first mortgage, when I bought my first house in 2012, my first mortgage was 4.75 actually, because I used a program that I didn't have to put money down. It was a higher rate, but that was my rate here. And then here rates were again 4.75. So we had anywhere between 3 and 4.75 from here to here. All right. And then from then on, rates started going down slowly, and they kept going down slowly. And then right here, 2019, 2020, rates started getting back down into the low 3s. And then in 2021, rates got in the 2s. So what happened here? If we're comparing now to here and we make ourselves short-sighted and see just for the last, 12 to 18 months, let's say, and compare our current market to the last 12 to 18 months, sure, it looks awful because days on market's almost double what it was at the bottom, right? When it was the lowest days on market. So yeah, homes were flying off the shelves in record time. They were closing in record time. I mean, we're talking about, this is 25 days from list date to close date. So everything was closing within 30 days of listing, period. Right now, we're under 2 months. So this is not a bad thing when you guys look at the history here, because every single one of these years was a good market. Every single one of these years was an increasing market in value. So right now, we're still in good shape. We would really have to hit about here before things get concerning, and we have to hit about here before we go, oh shit, it's going to crash. This is something you guys need to talk to your sellers about when they're talking about, oh, I'm nervous, I want to lower my price. Well, hold on. Just wait it out. This is not last year's market. You're not going to get 20 offers in the first day. So you got to wait. You got to keep it on market. Maybe drop your price, I don't know, 1%, maybe 2% after 30 days. Maybe another 30 days goes by and you go, okay, now I'm at the average days on market and I'm not under contract yet. Maybe I should do a price drop. Maybe I should really think about, am I listed in the right price? That's when you should start thinking, is between 30 and 60-day mark, not a week. So that's something to show to buyers as well. If they're concerned about what kind of market we're in, we're still in a very healthy market in regards to days on market. Now let's talk about listing success rate. I was talking to you guys about when rates were increasing. So this here, this and this, these two arrows at the bottom, this is when the market was at its worst point, okay? So listing success rate at this time was 24%, 25%. So 1 out of 4 homes that got listed actually sold. That's awful. That is really bad. So that's what happened. That's part of the crash. Things weren't selling. So starting in 2009, near the beginning of 2009, things started to get a little bit better. 2010 is really where we started to see prices go up. All right. And things got pretty good and stable for a long time. So average, if you look over this time, averages 60s, 70s, and then we get into the 80s with rates going way down. And then last year, we got 95%, 94%. So at the best, it was 94% success, but we also had the lowest inventory ever in our country's history, not just Maricopa County. Right now, we're at 67%. What has caused this drop? Well, let's look at something real quick. What did I tell you guys? Back in 2014, this arrow right here, that's when rates went up, right? Rates were in the high 4s in 2014. Just going from the 3s to the high 4s, look at this drop. Do you see this sharp drop right here? This is kind of what's going on now. But what's happened now is that rates have gone up even higher than they did then. So yeah, their listing success rate went down, but where are we at right now compared to then? Exactly the same, 67%, 67% listing success rate. So 2/3 of homes that get listed close. All right. That's another thing to discuss with people, sellers, buyers. This is just good data, good information. Is it crashing? This, if you look at it from here to here, oh my God, it looks like it's crashing. But when you expand this and look over the course of the past 10 years with an increasing good, healthy market, it hasn't been decreasing like this for, other than this point. But over this entire amount of time, listing success rate is not 95% on average. It's in the 70s. So is it a little tougher right now? Sure. But this comes down to education and patience. People are also right now, a lot of sellers, because they're not getting offers in the first week, 2 weeks. If they're not sold in the first month, they're pulling their house off the market. I'm just going to wait. Well, that again comes down to us to educate our clients and give them the correct data. Hey, you got to have patience. The average days on market over the past 10 years is 82. You're trying to pull your house off the market in 30 days. This is not the same market it was last year. We got to have patience. If you want to sell your house, this is a 90-day term. Let's wait for 90 days before you decide you're going to take your house off the market. And everybody in here should be signing ER agreements with your sellers for 90 days minimum, 6 months standard, because that's what it's going to take to sell a house, 90 days. All right. Sales per month. Back in 2011, this was an increasing market in 2011. That started in 2010. So this chart doesn't go back any further, but I wanted to start at 2011. Okay, so in 2011, we had 1,500 sales in January of 2011 total. And this is for the greater Phoenix area. So let's say Maricopa County. So we had 15 sales in 2011 when prices were going up. And this is what began a healthy market. And it kept going up and up and up. If you drew a line from the top of this to here, it shows a straight line going up, right? So let's talk about sales per month though. If you talk about how many sales per month are average, every year we have fluctuations where they go down, right? So first quarter of 2014, we had somewhere around 4,000 sales, a little less than that. Here's another one, 4,000, 4,000, a little more than 4,000, 4,500. Here's 5,500. Here's another one that's low, below 5,000, or maybe right at 5,000, right? Right now, last month we had 4,560, I believe it was. So last month we had 4,560 sales. So last year, a lot of sales. The year prior, a lot of sales. Earlier this year, 2020, 2019. This is that 3-year insane market that we've seen. Many of you may not have even been in the industry longer than this. So this is all you know. So if this is all you know, then it's hard for you to compare and say, oh my God, this is awful. Yes, but let's look at all the times in the past 10 years in an increasing market where it was similar to where it is right now. What's driving this? Interest rates, obviously. So do you want to close more deals? And I have 2 questions for you. What are you doing on a daily basis to get a piece of the 4,600 sales that we had in this county last month? What are you doing every day to find these people. There's people still buying out here. So what are you doing to find them? What are your daily activities that are leading to conversions in your future? You guys have to understand that this real estate game that we're all in, this is something that takes time and it takes effort. You can't expect to make 2 calls, and if you don't get a sale, you just stop working for 2 months. You have to do things every single day. This is a pipeline. If you were to plant seeds in the ground and never water it, do you expect to have fruit in a few months? No. So you have to plant your seeds. You have to properly till the land. You have to water your crops every single day, and then it starts growing. And when it starts growing, do you have fruit? No. You still have to water it every day. It's got to become a mature plant to finally fruit for you. The last 3-4 years, what has it been? It's been low-hanging fruit. The trees are already there. The fruit are already there. Everything is ripe. You just pick it. That's what the market's been. So if you thought that the market was hard the last few years, then you're in for a rude awakening. The market is hard now, but what are you doing? Are you working hard to keep up with the market, or are you just waiting? So are you waiting like the buyers are to buy next year and you're waiting to make sales next year? Or are you educating people to actually convert them this year? So let's go a little bit more into training here. Let's talk about pros and let's talk about cons. So let's go down the pros first. Right now, this market, these are the pros for people that are buying. Seller paid closing costs. So seller concessions, that's the next one, same thing. Seller paid buy downs. You can use concessions to buy down the interest rate to save money monthly. You can actually get your repairs done and ask for them to fix things so that it's perfect for you and you don't have any expenses when you move in. You can ask for price negotiations. Hey, you know what? We're going to offer you $20,000 less than your listing price, and we also want $15,000 in seller concessions. And people are considering that. I just had a client buy a place that was listed for $445,000. They got under contract for $420,000 and got $13,500 in seller credits. We bought down their interest rate, paid every single closing cost that they have, and they got a $25,000 less price on the house. No waiving of rights, no waiving of appraisal, no waiving of inspection. This was insane stuff that we saw the last couple of years. People were waiving their rights in general. They would just be like, I don't care what I have to do. I just want to get under contract. I just want to buy a house, right? Well, they were paying above appraisal price. They had to cover the difference. They were putting their earnest money hard. They were waiving inspections. So whatever the condition the house was in, they'd get their inspection and be like, oh, shit. Now I'm either going to lose $10,000 or $5,000 or whatever my earnest money was, or I have to go through with it and buy a house that has problems. You have more time to decide. So you can negotiate for a few days, not be like, oh, I got to give you an offer in the next 30 minutes. Right? You got more homes to choose from right now. Finally. So we had such a problem with inventory that people were just getting beat out. There was too much competition, too little homes, too many buyers. Now you have more things to choose from. You can find exactly what you want. First-time home buyers are finally being accepted again. That's huge. There is a giant market of underserved first-time home buyer clients that people aren't marketing to, because everyone's got this taste in their mouth for the last few years that sellers don't want to work with first-time home buyers. That is so far from the truth right now. Buyers right now are being considered regardless of what they're coming from and their qualifications. As long as they're qualified, sellers will consider. DPA is being accepted again. Back in 2019, the beginning of 2019, when I started as a broker and I was actually able to offer down payment assistance loans, I saw it as a huge opportunity. When Steve and I partnered up back in 2019, we did several, it was probably 8 to 10 transactions in the first couple months of me being a broker, where all we did was talk about first-time home buyers and DPAs. And they don't have to be a first-time home buyer to get a DPA. You'll learn more about that in our mortgage program training that we're going to do with you guys. But DPAs are being accepted. So if there's people out there worried about saving money for a down payment, this is their solution. And it's a temporary solution. We'll talk more about that, but that is their solution. And then again, you have flexible sellers right now. So they'll do whatever it takes to get the deal done. It is a balanced market. We've been waiting for this balance, and it's here. It's a little bit of a buyer's market, but it's not this crazy buyer's market right now, but it's a little bit of a buyer's market finally. So you can negotiate. You can get all of the things above. Sellers are flexible. They'll consider any options on the table. What are the cons? It's pretty minimal here. Higher interest rates. That's what everyone's talking about right now. Higher payment for the temporary period of time, which is from now until they can refinance. And then, of course, when the market is a little bit slower, appreciation is slower. But there's still an expectation that homes are going to appreciate 3% from this year now to next year at this time. That's the expectation. So conversely, everyone is saying, oh, prices are going to go down. Well, what's really gone down? Let's break that down a little bit. What's really gone down is list prices. In the past, you know, appraisals are based on sales comparison. Every lender in the world uses sales comparison approach. They don't use the rebuild value of the home. They use the sales comparison approach. What has sold recently in the area, that determines the value of the home. So if you guys are looking at something where, oh, look, they're dropping their price. Well, where were they listed? Because what happened in the last 2 years is my neighbor would sell their house for $500,000. And then where would I go list it? I would go list it $550,000, like a month later. That's ridiculous. That's not correct. That's not a normal balanced market. A normal market over the past 40 years in real estate, the average, even including the drop, was 4% annually. So we've averaged 4% annually for 40 years. Well, if you go try to sell your house for 10% higher than your neighbor the day after they sold, that's what people were buying. Buyers were paying that last year. But now it's dropping. Why is that dropping? Because it's becoming more realistic. It's not that the value of homes are going down. It's that the list prices that are unrealistic are going down and they're matching what the comps were. Comps are going to determine that. Refinancing can be $0, Teresa. So there's closing costs that are involved with every transaction. Refinance is included. However, they can take a higher rate to pay for all of their closing costs. They can do that. And with us being a broker, being able to offer on average 0.5 to 0.75% lower in interest rate than the big banks, if they come to us and get the same rate they got at the big bank, they would be at $0 cost. We can work with them on that side of things. But even then, they can roll in the cost of refinancing. The only real cost that comes out of their pocket to refinance is the cost of the appraisal. And in a lot of cases, if the customer is well qualified and they're engaged and they provide us all their documents and they have skin in the game, we as the brokers, our team, we will pay for their appraisal. We can actually make it a $0 out-of-pocket cost for them, not even the appraisal. That's all negotiable. That's all able to be changed. That's all able to be, you know, rates can go up to cover closing costs, whatever they want to do. They can get a lower rate if they want to pay more closing costs. So that's kind of a loaded question. But on average, if they're getting a normal market interest rate from a normal banking institution, they're looking at approximately $3,000 to refinance. So interest rate projections. This is something you guys want to talk about with your clients, of course. Rates are high right now. They're about 7%. But Fannie Mae, I don't want to hear about their cousin or their aunt or their brother or their dad or the news or any of that stuff. They're not using data. Fannie Mae is the largest investor in mortgage loans in the country. You guys may have heard that name, Fannie Mae. They're backed by the U.S. government. They own trillions of dollars of mortgages. They are the source of data that you should rely on, not my cousin from Tennessee. Do you want a source of data you can actually rely on? Check out Fannie Mae and what they say. Their projection, and they're the ones that, you know, offer these loans. They're the ones who kind of determine where the rates are at based on what the market's doing. Right now, rates are 7%. They're expecting rates that are going to be 4.5% by the end of 2023. 1 year from now, they could buy a house and they can refinance to 4.5%. So what happens if the mortgage payment goes from 7% to 4.5%? Let's see the next slide here. Here's a little example for you. So for a $400,000 mortgage, let's say the taxes on the property are $1,800 a year. Let's say the insurance is $840 per year. At 7%, their total monthly payment is going to be $2,881 right now. That's including taxes and insurance. PITI, for those who don't know what that means, that's principal, interest, taxes, insurance. At 4.5%, that exact same mortgage goes down to $2,246. That is ginormous. So if somebody can get into the market right now and buy a house and have the seller pay all their closing costs and pay to buy down their interest rate, and they get negotiation on price, and they get to have all the repairs that they want done, and they get all those benefits, but they just have to pay $600 more a month for a year. And next year, when everybody comes back out in the market and destroys the market again, where they're like, oh shit, I can't buy, now I have to sit on the sidelines for another couple of years, they're going to be at a detriment. But instead, they can buy now with all those advantages and get a better price on the house and then save $635 next year. That's on a $400,000 mortgage. The savings are even larger on bigger mortgages. However, what happens when rates go down? But Jerry, I'm just going to wait until rates go down. Then I can afford the payment and I don't have to refinance. All right, well, when rates go back down, prices will start rising rapidly again. It happens every time historically. If you look at the market and prices and you look at interest rates, every time the rates go down, prices skyrocket because affordability goes through the roof. So people don't look at what's the rate, what's the price. They look at what's the payment. How much is this going to cost me every month? Right? So everybody who's waiting on the sidelines right now are going to re-enter the market and flood it again next year. So people who have more cash, more money to put down, less concerns about repairs. They're not first-time home buyers. They're not using DPA. They're not using FHA or VA. They're all going to be back in the market again as competition to your buyers. They're going to drive them back out of the market again, and prices are going to increase again. So when's the better time to buy? Why am I looking at buying another property myself right now? Because I know the opportunity is here. What goes up every year and what doesn't? What goes up every year? Rent, period. No real information needed on that. Every year rent goes up. You go sign a lease, oh, we're increasing your rent. Even if it's $50, we're increasing your rent for the next year. So once your lease is up, you can expect that your landlord or apartment complex or whatever is going to raise your rent. What doesn't go up? Your fixed mortgage payment. So in 5 years, your rent is going to be several $100s more, possibly $1,000 or more, and your mortgage will not. And in fact, historically, people refinance their home every 3 to 5 years on average. Anybody who's been in the mortgage business for several years knows I can expect that every client I do a mortgage for is going to refinance with me in 3 to 5 years. And actually, it's been shorter than that the last few years because of mortgage interest rates continually getting better. So everybody who's bought a house or gotten a loan from us this year between 5 and 7% interest rate, they're all going to be refinancing with us by the end of the year next year. So on average, 3 to 5 years, people reduce their payment. So one could argue that your payment will go down over time when you own as opposed to rent constantly going up. That's education for your clients. You guys got to talk to them about that. Just a couple little things here to give us a little break from information. Some catchphrases that I say: don't wait to buy real estate and wait. Many of you have heard that. Many of the millionaires that have been created through real estate, they say it doesn't matter when, just if you can buy. So that leads to the next one. If you can qualify to buy now, buying now is always a better choice than renting. And then fire your landlord and become your own. Okay, maybe I'll buy a house right now. Rates are high, so the payment's a little bit higher. Okay, well, how about this? Buy a house right now, cheaper than you want to spend. Don't buy your dream home or your forever home right now. Buy something, live in it for a year. Next year, become a landlord, rent it out to somebody. As rent continues to increase, your cash flow increases, your net worth increases. And next year, buy another house, right? How much money do you need down? Oh, but what if I don't save money from now until next year to buy a house? Okay, you can utilize a down payment assistance program and not have to pay any money out of pocket. And if we can get seller credits, you pay $0 to buy a house, period. $0 out of pocket. So why would you rent? Now, of course, you're going to have people that may be moving here for a temporary job. Buying may not be the best choice for them. Maybe they're waiting, to go to college, or maybe they're here for college and they're going to move back to their home city. Okay, renting might make more sense for them. And even then, if they're coming here for 4 years to go to college, buy something. And then when you leave, you've got a cash flowing property in a college town. Let's talk about converting a renter to a buyer. So we get a lot of renters. We get rental leads, which I think are gold. If I had the time, I would work on them all day because I know I can convert them because I have the data and I'm not afraid to say what's in this slide here. Do you care? And I'm asking you guys, do you care about what's best for your client? That's what it always should come down to, doing what's best for the client. If you do what's best for others, then you will be blessed. Buying is in their best interest in 99% of scenarios. The 1% are the people who are going to be here temporarily for a short term. You're doing a disservice to your client if you don't educate them about being buyers. What do I say? How would I handle this? If you just follow the script below verbatim, you can watch your conversions increase. And you got to be a little direct in what you do. Remember, you are the professional. You should be controlling the conversation. If you're an order taker and you just let the customer determine how your conversation is going to go, you're not going to succeed in sales ever. Doesn't matter what sales you're in. Don't let the customer guide the conversation. Ask them what they want, and it's your job to educate them, but it's your job to control that conversation and guide them. I'm curious, have you considered buying your own place? If I can get you into home ownership for less money than renting a place, why would you not consider it? Renting a place will require 1 month rent, $2,500, security deposit, $2,500, pet fee of $400, because a lot of people have dogs or cats, application fee of $50. So that's just $5,450 just to move into a rental. How much money you need out of pocket right now to get a rental? So we have programs that can get you into home ownership for literally $0 out of pocket up front. Let me get my in-house mortgage broker on the line to confirm that that program is still available. And then pick up your phone. Don't wait for them to answer. Pick up the phone. Dial us, one of us, anybody on the mortgage team. Dial us and don't wait for their permission. Just say, and when we answer, yeah, hold on 1 second. Let me just see if it's available. Just, it's pointless for us to talk if it's not available. Pick up the phone. Hey, mortgage broker, I just wanted to confirm, is that program for no money down still available for everybody? And then let us go and say, yes, here's how it works. And then what do you get right now? Oh, wait, but that only covers the down payment. What about the closing costs? So we have a program, and I'll educate you guys on this in our training, but we have a program that gives you a 5% down payment assistance. You use 3.5% for the down payment, use 1.5% towards their closing costs. And if you need more than that, or they want to buy down the rate, you get seller concessions. Seller concessions are being given on more than half of transactions right now. You can get it easily. So if you want to convert renters to buyers, follow this. And if you don't follow it, don't wonder why people aren't converting to buyers. You have to do this. You have to take the initiative to actually do this and say it. Because if you don't say it, the answer is no anyway. Is there a possibility that the answer is still no if you ask? Yes. But there is a possibility the answer is yes. If you don't ask, it's automatically a no. So you guys got to step out of your comfort zone, expand your horizons, and start asking and start prodding and start prying and start educating and talking to them in this direct, matter-of-fact fashion. All right. So I guess I asked this in the beginning, but I definitely want to answer your guys' questions or kind of go through any other objections that you have. For me, I just want to get everybody comfortable out there. So what other objections are you hearing?
I can think of one. Credit score is not so great, or there's a lot of debt, so they probably need some help and guidance with fixing that.
Beautiful.
I think.
Yep, no problem. So one thing here that I want to pop up on your screen real quick, guys. This here is super important, okay? I truly believe in this. Your network is your net worth. I know you guys have scenarios where you're trying to give them an answer on the fly. You feel the urgency of giving someone an answer, but understand that your partners are your network, and that's what's going to increase your net worth by who you know, what they know, and the education they can give to your clients. So something that a lot of people ask about, like Teresa said, is, oh, I don't think my credit's good enough. I don't think I have enough money saved. I think I have too many debts, scenarios like that. Now, we offer free credit repair, okay? And we're going to tell them everything that they need to do to get their credit score up to a qualifying standard. The other thing is, just because they've been denied by a different lender, it doesn't mean that we're going to deny them. Because as a broker, we have 80 different banks that we work with that we're partnered with. We have all of their programs available. We have all of their different qualifications available. So if they talk to 1 or 2 banks, we still have 78 more we can call, right? Now, they don't know that, but they need to speak to us in order to know that. And you need to educate them on that. So you guys should know that. We have programs as low as 500 credit score. There's not many people that have lower than a 500 credit score. They have to really try to get under a 500 credit score. They have to like get debts and then never pay them to be under 500. It's pretty bad. So we have the ability to do loans as low as 500 credit score. And then on top of that, like I said, we have a program that's pretty nifty. It's called Wayfinder. We find the way to get them a higher credit score. So if their credit score is currently 540 and they get better terms at 580, for instance, one of our mortgage guys just had a client who calls me. He's like, hey, and it's Oberti in Florida. Some of you may know him. He calls me. He's like, hey, I have a client who's got, forgot what it was, like a 614 credit score, I think, something like that. Anyway, we got our credit score above 680. Do you know what it took? It took 2 days. And all it took was that they removed themselves from their mother's credit card. Mother wasn't paying her credit card bill. And our client was on there as an authorized user. And it brought down, her credit score like 70 points. All we did was have her call that company, say, I no longer want to be an authorized user on this account, which is absolutely her right. She's not financially obligated to that debt because she didn't sign for that debt. She's just an authorized user. She just gets a card and can use the account. She removed herself. She got us the letter from the credit card company, and then we provided it to the credit bureaus. And within 24 hours after that, it was removed off her credit and her credit score was way higher. And then she qualifies for a conventional loan. Just an example, but there are many ways that we can get people's credit score up, and we'll take that. That's something that we pay for, mortgage brokers. We pay for that, but we're more than happy to do that because for us and for you, it can be the difference between somebody who doesn't do anything to somebody who actually buys and closes on a transaction. I want what's best for the client. If somebody is concerned about their credit, send them our way and we'll give them all the advice they need to be able to buy. So you have that tool at your disposal. You just have to tell them about it.
Yeah, just piggybacking off what Jerry just said, we need to have those conversations with our clients and just let them know, like, hey, you don't think that you can buy because your credit score is low? Let's just talk with our broker. We have credit repair programs, and just opening up that conversation. That's the biggest part. Just for everybody on the call here, all the information that Jerry's getting is from Cromford Report. And sorry, Nick, but that's only in Arizona. It's a third-party service, independent service, and they compile all the data from the MLS. So that's accurate information. Because also they do weekly Zoom calls with Tina, who's with Cromford. Like all the title companies host that stuff. So I think it's very important to join into those conversations too and listen to what the source, Cromford Report, is saying about our market. And they do it weekly.
So anyway, any other questions you guys have, I would be happy to do a training on programs just to kind of show you guys something really quick. Since I'm still sharing my screen, here is some of the basic information we're going to go over. Generating more buyers with unconventional mortgage products. There's a lot of stuff out there that we can do that people don't even know is available. All right. So we talk about disadvantaged people over the past 3 years, advantages currently for buyers in this market. We talk about down payment assistance loans and how ours differ from the common ones that people know about. We talk about recently 1099 from W-2. Everyone thinks it's a 2-year waiting period. We have a program to solve that. We have DSCR programs, which means you can buy a home, a rental home, as long as you've been a homeowner before, you can buy a rental home without any income qualification, period. They don't care about your income at all as long as the property will rent for what the mortgage payment is. Actually, 75% of what the mortgage payment is. No DSCR, even if it doesn't rent for as much as it would be the mortgage payment, you can still do it with 25% down if you're buying an investment property as a rental. VOE only program, meaning if they have a hard income to prove, we just need a VOE from their employer. Like if I work for my cousin and my cousin pays me partly under the table and partly on a paycheck, and I can't give them pay stubs to show my income. If my cousin fills out a VOE form saying I make this much money per month, they go off of that strictly. That blows everyone's mind when I tell them that. Bank statement loans for people who are self-employed and write off too much on their taxes and they don't qualify. We can qualify them with 12 months, as little as 6 months of bank statements showing how much they deposit in their bank account. We use that as income. Chattel loans, homes on leased land. We can do it. A lot of people don't know you can do that. So there's hundreds of listings in Maricopa County. I think there's like 800 listings right now that have some sort of leased land. We can do that loan as little as 5% down on a 25-year loan. Asset depletion. If they have a bunch of money in the bank, but they have no income, typically they'd be disqualified by any large bank. We can do it. If they have a bunch of money in the bank, if they're a trust fund baby or they have an inheritance. Non-warrantable condos. Oh, the condo community, it doesn't pass FHA or VA or conventional guidelines. Too many investors own property. Oh, it's okay. We can do it. First and second simultaneous loans. If somebody can't qualify for a jumbo, but they want to buy a jumbo home, conventional loan plus this second simultaneous we give them solves that problem, because they can have a lower credit score to qualify it. HELOCs on investment properties. This is the stuff that we're going to go through in our next training. Hopefully you guys are excited about that, because again, it's going to give you more tools, not just data, not just graphs, not just talking points, not just scripts, actual tools and mortgage programs that'll help convert more people into buyers and help disadvantaged people and, underserved clients. If you go out there and you spread the word, you realtors, you're the foot soldiers. You guys are the ones out in the market talking to people and generating that interest from buyers. If you guys go spread the word, we'll take care of it. Just spread the word and we'll get it done. And then we both get to win. So that's the kind of stuff we got to do. We got to partner up, everybody. Thanks for tuning in today. I appreciate you guys. I will leave you with one more thing as well. Steve sent an invitation with a Calendly link to get on my calendar. As we said in the team meeting that we had last week, I'm going to be doing one-on-ones with everybody, a 60-minute one-on-one. It'll be in person for those of you that live nearby. Otherwise, we'll do Zoom. But if you live nearby, it's required to be in person. We're going to be 60 minutes talking face-to-face about what you are looking to accomplish in 2023, what your 1, 2, 5, and 10-year goals are, what's standing in your way, and then what you need from me and Steve for education, technology, training to be able to do your jobs correctly and succeed. Everybody sign up for that and set up your time. I'd like to get those done by the beginning of December, please. Everybody good?
Yes.
Thank you. Yes, thank you very much.
Thanks, everybody. And talk to you soon.